Well, I mean, first of all, I think that's the last thing the U.S. government wants is to help push the price of gold higher, because a rising gold price is a bad sign for the dollar and its role as the world's reserve currency. I mean, the dollar's primary competitor is gold. Central banks have a choice. They can own gold or they can own dollars. And more central banks are choosing to sell dollars to buy gold. And so if the U.S. Treasury joined the gold buying party, that would put even more upward pressure on gold and create even greater incentives to buy it. And of course, that would send the wrong message. Right? If the U.S. started buying gold.
Join Peter Schiff as he explores why central banks are ditching dollars for gold, the implications for the US dollar, and the unrealistic goals of the Federal Reserve. Discover what skyrocketing gold prices mean for inflation and the broader economy. Don't miss this deep dive into the current financial landscape.
Well, I think we've already broken out as far as gold hit a new all-time high, and we took out a lot of the resistance that was overhanging the market just above $2,000 an ounce. So we got above 2,400. So I think gold really has support just under 2,300 now. I think we've moved up to a level where we're now seeing support above what used to be resistance. But what might be the catalyst for a more substantial move that will get the price of gold to 3,000 and beyond would probably be the realization that inflation is not going back down to 2% and that the Fed is going to stop trying to get it there, or at least pretending that it's trying. I think the markets right now still are harboring this fantasy that a return to 2% inflation is possible. In fact, if you look at the break-evens on 30-year treasuries and tips, investors are expecting inflation to average 2.3% for the next 30 years. I mean, that is a complete pipe dream that that's going to happen. The low inflation that we've had since the '08 financial crisis, that's an aberration. That's the exception, not the rule. You look at the 40 years before the 2008 financial crisis, inflation averaged close to 5% a year. And, the Fed never had a 2% inflation target when inflation was above 2%. The entire history of that target existed when inflation was below 2%. That's why they made it up. They used it as a justification to create more inflation, because they claimed it wasn't high enough because we were still below 2%. But because they created so much inflation to get us back up to 2%, we're now way above it and we're never going back down to it. And the Fed doesn't have the political will to do what's necessary, because if they really wanted 2% inflation, they wouldn't have stopped hiking rates. They have a long way to go up. And Powell would not be telling Congress that he doesn't care about budget deficits and that he can't criticize them. He would be laying into the government for running these deficits, because there's no way we're going back to 2% inflation with $2, $3, $4 trillion a year budget deficits. It's just not even possible. So if Powell is not willing to stand up and do what's right and criticize Congress for doing what's wrong, there's no chance of 2% inflation. So when the markets get their arms around this, they're going to have to reprice. The Fed will absolutely ignore inflation. Will it deliver cuts before or after the markets are expecting? That I don't know. But it makes sense that everybody is, agitating the Fed for inflation, because everybody's addicted to it. Because the Fed used inflation to keep interest rates so low for so long, everybody has grown an addiction to the cheap money. And when you take away the cheap money, obviously the addicts are going to demand more of it. They're starting to have withdrawal. We're seeing banks fail. We're seeing pressure now on the stock market. Debtors are feeling the pinch of rising interest rates. Consumers, not only are they dealing with rising prices for food and energy and everything else, but the cost of paying interest on their debts has also gone up a lot. So everybody wants the Fed to reduce rates, and so eventually they will. But, they can't reduce rates to prop up an overly leveraged economy and fight inflation. They're mutually exclusive. In fact, when they try to bail out the debtors by printing money, they're conceding and they're losing the war on inflation. Inflation wins, and it's going to accelerate to a whole new level. Well, I mean, first of all, I think that's the last thing the U.S. government wants is to help push the price of gold higher, because a rising gold price is a bad sign for the dollar and its role as the world's reserve currency. I mean, the dollar's primary competitor is gold. Central banks have a choice. They can own gold or they can own dollars. And more central banks are choosing to sell dollars to buy gold. And so if the U.S. Treasury joined the gold buying party, that would put even more upward pressure on gold and create even greater incentives to buy it.
Peter Schiff explains that central banks are buying more gold due to concerns about long-term inflation and doubts about the US dollar. He argues that the US avoids pushing gold prices higher to maintain the dollar's reserve currency status. Schiff predicts that persistent budget deficits and political reluctance will keep inflation above 2%, leading the Fed to eventually lower interest rates, which will further inflate gold prices and contribute to an impending financial crisis.
And of course, that would send the wrong message, right? If the U.S. started buying gold, imagine the message that sounds. That's like, the policemen are having to, call in the police to protect themselves, right? I mean, it would send a message that things are not great, because we're telling everybody how great everything is. It's a great economy, the strongest U.S. economy. Inflation is going back down. So why would the U.S. be buying gold? It would be sending a mixed message to the world. Yeah, I mean, I don't know that they are smart enough to have a plan B, or not. Maybe it's not about intelligence. They don't even have the hubris. I mean, I think they're very self-confident in the dollar's position, and they don't think there's anything that could upset that. So I don't think they're planning for a reality that they think has zero probability. They're very arrogant in this respect. And again, I think they overestimate the importance, because they think that the rest of the world needs us, that they need our dollars, that they need our consumption, that we, without them, they're ruined, right? Because we're the only ones that can buy what they produce. We're the only ones that can borrow what they save. I mean, this is nonsense, obviously, but a lot of people believe this, and so I don't think anybody is going to be worried. And if you look at where the national debt is, it's $35 trillion almost. People have been very concerned about the debt, at least people like me, since it broke $1 trillion in Ronald Reagan's first term. In fact, Reagan was concerned about it before he was elected, and was critical of the budget deficits and the national debt under Carter. But if you're in Washington and you've seen the national debt go up 35-fold, and as far as you're concerned, there have been no consequences, no adverse consequences, well, then why should there be in the future? I mean, it's gone on so long, why can't it go on indefinitely? If the people who were worried about the deficit when it was at 5 trillion, 10 trillion, we didn't do anything about it. Now it's 35 trillion, and none of the bad stuff that people were worried about has happened. Look, the stock market's at a new high. Unemployment is, below 4%. Everything is awesome. So why should we do anything about the deficits? Because they clearly are not a problem. Because look how big they are, and, and everything is fine. And so, to me, it's like, somebody that's smoking cigarettes, and the doctor says, you got to quit those cigarettes, you're going to get cancer. But, they keep smoking and they don't have cancer. They don't quit until they go to the doctor and he says, hey, you got cancer. And then it's like, oh, shoot, I better quit smoking. Well, it's a little late for that, right? You should have quit a long time ago. But, you think, well, I haven't developed the cancer yet, so I guess I can keep smoking. So by the time we get the crisis, it's too late, to fix it, right? That ship sailed a long time ago.
Thank you for joining our discussion with Peter Schiff on key economic issues affecting gold, silver, and the US dollar. If you found this video insightful, please like, share, and subscribe. Don't forget to hit the notification bell for updates. Share your thoughts in the comments below. Stay tuned for more financial insights.